All right, in 2024, Malaysia is set to see a growth or a significant growth in its fintech industry, and this is primarily due to increased digital adoption in the country, supported by government's regulations, funding, as well as a growing talent pool. And the fintech landscape in Malaysia particularly is evolving dynamically, and as well as through various segments, which includes digital banking, and then we have Islamic fintech, we have insurtech or insurance technology, and then we have wealth tech and also digital payments. So to discuss further, we have the right authority in the studio joining me this morning, which is Wilson Baer, the President, Fintech Association of Malaysia, or FAOM. Good morning, Wilson.
Good morning, Nabila.
Thank you for joining me this morning. All right, maybe firstly, you can share what are the top things that were the highlights in the fintech industry in 2023, and what can we expect in 2024?
Sure, thanks, Nabila. 2023 marked a significant year for fintech developments because the whole world, and of course in Malaysia, we came from the aftermath of COVID pandemic. There was when the business communities started to get back to action in a more normalized setting. However, the bright side of the entire COVID pandemic was the spur of the development and adoption of digitalizations. And in the financial services, this was not excluded. And this is where last year in 2023, the Fintech Association of Malaysia, we have witnessed tremendous growth in the fintech industry in Malaysia. And I could give a few examples and highlights. And some of these are well known in the market. For example, we saw the first announcement of the digital bank in the name of Jack's Bank, which came to action in end of last year. And of course, this year in 2024, another two have announced that they have started operations. We have also seen regulators, both the main ones, Bank Negara Malaysia and Securities Commission of Malaysia, who oversees the development of fintech industry, have put in a lot of effort and also initiatives to further spur the digitalization in the financial services sector, underscored by the importance of the financial sector blueprint 2022 to 2026 by Bank Negara Malaysia, and also a lot of initiatives by Securities Commission of Malaysia. And we have also seen continuous funding and development in the fintech space, notwithstanding that there was a lot of current in the global economy. So that was what has transpired in 2023. And this year in 2024, the association, we look forward to more developments in the fintech space. Again, we are seeing a lot more developments. For example, today in Malaysia, we have more than 300 fintech companies in the country. And allow me to take a step back. When I first ventured into fintech space about 10 years back, and that was also the time when the Fintech Association was first started, we barely had less than 100 fintech companies. Today, we have more than triple the size. But more importantly, a lot of these fintech companies have grown in terms of maturity. If you just take a public transport ride along the fintech corridor, if I may, from Bangsa South to Mid Valley to KL Central, you could see a thriving fintech hubs and offices. And this marks, to me, a very optimistic future for fintech industry in Malaysia in 2024 and beyond.
We'll get there on the innovative or the bright side of the fintechs, but we know when it comes to technology advancements or evolutions, we know there were loopholes or challenges that we faced, especially in last year, 2023. So what kind of strategies or how can we improve this fintech industry in 2024 and years forward?
There are definitely challenges in any new industries. And to me, yes, financial technology is not something new. If you look back in the 80s, when the first ATM was invented, it was deemed as an innovation in financial services. When online banking was invented 20 years back, it was deemed as a form of financial technology. However, the term fintech was made popular in the past 10 years or so because of the rapid change in IR 4.0 in terms of adoption of mobile technology. And with that, obviously, there are bound to be challenges and perhaps loopholes or gaps that the industry has to come together to measure and also to make right. If I may say a few examples, that would be number one in terms of security. With digitalizations, in terms of data, in terms of access to data, access to information, this has to be done very carefully. This is where cybersecurity is put under tremendous focus by the regulators, by the authorities. And number two, with digital finance, it also means that there's a lot more awareness that has to be done, not just for the urban folks, the urban users, but also fintech users in a much more semi-urban or even the rural areas. So financial awareness has to be done right as well. So these two will be equally important as we narrow the gaps in the advancement of fintech.
But how do you see the adoption trends? I mean, towards the big organizations, we have no problem with that, but we are looking at all the SMEs, the small enterprise, small medium enterprise. So how do you see the adoption trends this year?
So for SMEs, they are definitely aware of the importance of digitalizations. And we have government agencies from MDEC to many others who are also supporting these SMEs to adopt digitalizations from various grants. However, at the end of the day, for SMEs, I think the key consideration would be how they could adopt digitalizations or fintech tools to further spur their commercializations, to further spur their P&L uptick when it comes to adoption of financial technology. However, since Nabila, you're on the point of SMEs, I could also segue into the point where the fintech services have also benefited SMEs and also MSMEs in a large scale. Case in point, our current financial services system, in terms of lending, in terms of financing, it may not be too straightforward or may not be too favorable to some of these SMEs and MSMEs. However, with the advent of fintech services, for example, equity crowdfunding and peer-to-peer platforms, both are regulated under Securities Commission of Malaysia. We have seen more than 10,000 SMEs and MSMEs that have benefited from these two fintech services in terms of fundraising. So more than 4 billion ringgit of financing and fundraising have been disbursed through equity crowdfunding platform and peer-to-peer companies, which have benefited these SMEs and MSMEs largely in the country. So this is where I believe that more effort should be done to further help SMEs in adopting and embracing the fintech revolutions.
Okay, speaking of which, can I touch a bit on in terms of regulations? Do you think that the regulatory environment has continued to support the growth of fintech, especially industry in Malaysia?
So from the Fintech Association point of view, we have the opportunity to be the bridge between the fintech industry and also the key authorities and the regulators. And from our experience of doing a lot of roundtable discussions with Bank Negara Malaysia, with other regulators, together with the industry participants, what I can say from the perspective of the Fintech Association of Malaysia is that in Malaysia, we do have very progressive regulators. We do have regulators who are looking openly and progressively in terms of encouraging more innovation to be done in this market. And there are even documents which have outlined the importance of digitalization and also fintech revolution as well. If you were to refer to the financial sector blueprint, which was released by Bank Negara in the year 2022, in my opinion, the word count of digitalizations, the word count of financial technology has been on the highest. And this is where I believe that more conversations, more discussions, more engagements with regulators are important in order for the whole FinTech Malaysia industry to grow to the next level.
We can expect more perhaps on next year.
Exactly.
Especially in the budget.
Yes, hopefully.
Budget talks. Okay, can you compare, can you explain to us or enlighten us when it comes to comparing Malaysia and other regions in the other country in the regions when it comes to adopting trends? How innovative are we in adopting this fintech?
Malaysia, we definitely are in a prime spot to do more, and we are well positioned to be a thriving fintech hub. However, I believe there are a lot more things that can be done. But let me start with the bright sides and the advantages that Malaysia has as a market and as a destination, which is often overlooked by regional investors and even regional fintech players. Malaysia, we are strategically located in Southeast Asia. Yes, our population size comparing to some of the neighboring markets, in the case of Indonesia or Vietnam, we may not boost the kind of population. But if you look into the absolute amount of financial services opportunities, whether in the insurance space, the gross written premium, or in the banking space, the assets and transaction volume, we are actually primed to be one of the leaders in this region. So this is where if there are fintech companies who are able to really thrive and serve the majority of the Malaysian consumers and users, this would put these companies to be well positioned to not just be a leader in Malaysia, but also take on in the Southeast Asian region. Number two, we boost relatively efficient infrastructure with scores of talents who can converse well in multi-languages. And I believe this would be also another key advantages for fintech companies to look at Malaysia as an important hub. And number three is in terms of our cost of doing business comparatively to perhaps down south in Singapore. Of course, Singapore, they have cleverly developed themselves as a fintech global funding hub. A lot of the global fintech companies have set up regional headquarters down south in Singapore. But I think Malaysia, we also have our fair share advantages, underscored by our strong regulatory openness and also our infrastructure efficiency. And this is where Malaysia could be a very good thriving spot for companies to use as a test bed. Because if you look at Malaysia, it is not just about Klang Valley, right? If your fintech model can work in Klang Valley, in Penang, in Johor Bahru, it could mean that it may work well in other key cities in Southeast Asia. But at the same time, in my opinion, fintech is not here just to serve the urban market. I truly believe in the phrase of fintech for good, fintech for inclusivity, fintech for financial wellness. And this is where one must also look into the fintech innovation. How could these companies, these operators, be able to use technology to serve not just the poor in the smaller towns or the smaller cities, but also in the urban areas. So imagine if there are fintech companies who could take advantage of the Malaysian diverse demographics and market. And if you're able to crack the market from east to west Malaysia, I believe this could be a very good learning curve for these companies to take on the larger Southeast Asian region, from Vietnam to Philippines to Thailand to Indonesia and such. However, what I believe is that we need to demonstrate more success stories in Malaysia. We need to articulate more, which I don't think the industry has done enough. I think we need to step up more to really market Malaysia as the destination, not just for fintech, but also for digital investment as a whole.
But recently, last Friday, if I'm not mistaken, there was a launch of TRX, Tenaga Exchange, as the international finance hub for Malaysia. I think that's a good start. What's your opinion on that?
I think definitely it's a good start, right? To have a designated international financial district in the heart of Kuala Lumpur. However, again, in my view, to further spur fintech development, we need to look into both hardware development and also software development. Infrastructure development like TRX with incentives are great to attract investments, are great to attract talents. But at the same time, I think we also need to look into long-term policy making initiatives. For example, when it comes to education, how could we even implement certain educational policies from universities to colleges to high schools, so that Malaysian education system could start breeding the next generations of fintech-ready, technology-ready talents to compete with the regional markets. How could we even look into how Malaysia could compete with, again, our neighboring markets when it comes to attracting talents? Because like it or not, today we live in a truly globalized world, and talents are naturally attracted by better incentives, better opportunities, whether it's down south in Singapore or in other markets. How could we prime and articulate the key advantages of Malaysia? Case in point, for Fintech Association of Malaysia, we have more than 100 members. Most of the digital banks are members, most of the mid-tier to top-tier fintech companies are members, and a lot of them, they are homegrown players. And these homegrown players, they are doing excellent initiatives. But question is, how could we even further grow this segment so that the regional players can look into Malaysia as an important destination in the fintech space in Southeast Asia?
Amazing. So that's on the discussion on Hub, Malaysian International Finance Hub. But when we talk about fintech industry, if we ask all the people out there what's watching, what they understand is the cashless trends or cashless society right now. So I would like to know, where are we right now when it comes to being a cashless nation? Are we okay? Are we on the right track with the right trajectory, or there's still a room for improvement?
For the Malaysian development in terms of the cashless adoption, we have come a long way, pre and post-COVID. Pre-COVID, I would say that the adoption was relatively lower. However, due to the COVID pandemic, due to the shift of behavior as a mobile phone user, as a QR code adopter, today I could largely say that Malaysian as a society, we have embraced cashless technology. And there are a lot of key initiatives which have been launched as well. For example, the cross-border QR payment with Singapore, with Thailand, with Indonesia, the peer-to-peer transfer as well. Today, if you were to use our e-wallet in Malaysia, and if you happen to be in a few overseas market, you could do transactions overseas using the same e-wallet as well. And I've seen how, not just in big cities, but also in smaller towns and smaller cities, how e-wallet, QR code have been embraced openly. The food stores, the mom and pop shops, and these are all good trends. But of course, I think what is key towards looking at the whole cashless society development is essentially the benefits of having a cashless society. And I think there are a few benefits of embracing cashless. Number one is definitely the data-driven society, because with cashless technology, we will be able to harness more data that could not be generated in the past. We definitely could pave the way. For example, the government is also preparing for e-invoicing initiative, preparing for more adoptions of digital finance initiatives. So a relatively strong cashless society will also pave the way for more initiatives like this.
But do you think that we've been bombarded with too much platforms? There's Do It Now, there's Boost, there's TNG wallets, and we have May. Do you think we should unify one single, can we say, national platforms, digital e-wallets platforms, or we can just accept the whole platform that we have right now?
So yes, there are a lot of different e-wallet players out there, the e-money issuers out there. However, today there is already a national platform when it comes to payment, which is driven by PayNet. For example, for the Do It Now initiative, regardless today if you're using a May app or a TNG app or a Grab app or a Boost app, you could use the same QR code to transact payment. This was not possible a few years back. Without the standardized Do It Now PayNet initiative. So these are good steps which have been undertaken by the relevant authorities. And you are right, the standardizations of cashless transactions and behavior will be pertinent for further adoptions and embracing of fintech solutions.
I was kind of interested with what you said just now, is with the increasing of data extraction from all the digital efforts. But there was concern about the data security, which is extremely important, and even BNM has raised concern about low levels of the digital literacy. So how can industry players actually play a role in this issue, and how can we mitigate this?
I believe there are two layers to look at this issue. The first issue, or the first layer, involves both the regulators and also the operators. And this is where the relevant regulations, the relevant act, the relevant policy has to be set right, and enforcement to be taken place to ensure that operators can follow through in terms of data protection, in terms of security, in terms of tightened consumer data protection. This is on the first level. The second layer, I think it has to do with education, especially education to be served to the right segment of the market. What I'm referring to would be perhaps the elderly folks, the folks who may have not achieved a higher level of financial literacy.
Interesting, correct.
And today, because the access to digital finance is so easy, right? You can access to multiple apps. It's so easy to make transactions, and there are a lot of scams, there are a lot of frauds which are taking place on a daily basis. So this is why there should be more awareness programs curated to this segment. And I'm excited and happy to see that there are already steps taken to address this issue. For example, there's this initiative driven from FEN, Financial Education Network, which is both led by Bank Negara and Securities Commission of Malaysia, where they actually go to the urban areas and also smaller towns across the country to deliver financial literacy programs to teach and educate these different segments of the society in terms of the importance of understanding different services when it comes to digital finance. And from the Fintech Association perspective, we definitely want to do more in terms of exploring partnership with FAOM, in terms of looking into financial inclusion aspect as well.
But as we strive to be the most advanced or the most modern technology when it comes to financing, we are reaching the nation of how do we say, aging nation in 2030. So should we reserve some of the can we say traditional or conventional financial system, or should we go towards the higher technology of fintech industry? What do you think about that?
Well, I think a blend of harmonization has to be taken place. I think the fintech operators, the regulators must wear different lens when it comes to educating, especially as you mentioned, the senior citizens, the elderly segment, who have not fully adopted the wave of digital finance. And this is where certain room must be conserved and must be considered for this segment of population. However, I believe that the core of this conundrum of whether the whole of society, the whole ecosystem should embrace digitalizations, this is all boiled down in education. If the awareness program, if the incentives, if the education system can be done right to educate all fragments or segments of the society, then I think comes 2030, when the country becomes an aging population as a whole, we will be more ready to embrace all of these technological advancements. Because after all, if you put into perspective of a few decades ago, we as a society have also progressed a lot in terms of technology revolutions, from internet revolutions to mobile revolutions, and today we are even talking about Web 3.0 and whatnot. This is part of parcel development. The question is whether the right educational program and initiatives can be delivered to the larger society as a whole.
But not to forget those, there are actually in reality out there, there are still people that's underbanked, or perhaps they don't even have a banking account. Reality speaking. So how do we bridge this gap, especially when it comes to bringing them towards fintech? Because there's a big gap there to bring from a traditional, they don't even have a traditional bank account, but now we're talking about fintech.
Sure. There are definitely issues like these in terms of the underbanked population, or even the underinsured or uninsured population. Today, in terms of underinsured or uninsured population in Malaysia, in terms of life insurance, we are looking at about 40% of the average population who is not even insured. This is where I believe that the fintech players, even the financial services providers, they must realize that technology solutions is not the one for all ingredient to resolve all of these underbanked or underinsured segment or issues. It has to be a combination of having the right tools, the right digital tools, and also having the right proposition of the solutions to help this underbanked or underinsured population to come on board, to be benefited from better financial solutions served by fintech or other forms of services. And again, This is a combination of a lot of iterations or propositions. Perhaps certain form of human touch is still important. Certain form of advisory, the right advisory still has to be delivered. Certain forms of educational programs and incentives have to come in place in order to help all these societal populations who may be underserved in the banking space or insurance space to come on board in the fintech era.
And a part of it is we have to think about especially those in rural areas that still don't have access to internet. That's one of the problems that we should look at. And looking ahead, what are your plans to actually drive the maturity of Malaysia's fintech industry, and what do you anticipate the innovation trends in years to come?
So for 2024, the Fintech Association of Malaysia, we have a key plans. We have a few key plans to be implemented. So the association, we are anchoring ourselves in 5 different pillars. Number 1 is definitely in terms of talent development. Number 2 is really about market access. Third is about funding facilitations. Fourth is really about technology adoption. And last but not least, regulator and bridging and also awareness building. So these are the 5 key pillars that the Fintech Association of Malaysia is working on to further build the fintech ecosystem in Malaysia. So in terms of talent development, we are starting up the Fintech Association of Malaysia Youth Chapter through partnership with My Fintech Youth, whereby we want to work with colleges and universities to bring forth the understanding and adoption of fintech across all nations, not just at the working adult level, but to colleges and universities across the country. In terms of funding facilitation, we want to take advantage and also take heed of the government initiatives, whereby today there are more participations from GLCs, from the government machineries when it comes to funding allocations for innovations and technological advancement. We have seen how Khazanah has also participated in funding for fintech companies, how recently QUAP has also made announcement in terms of investing into technological companies and venture fund. FAOM, we want to be a bridge to further facilitate funding for fintech companies. And third is really about market access. The association, we definitely want to go out there, not just in Malaysia, but across the region through our network of alliance with the rest of the regional fintech alliance and associations to enable the regional players to know that, look, Malaysia as a market, we are ready for FDI, we are ready for market development, for market access, and this is a market that you must come in and thrive. And this is where a lot more initiatives are put in place. And number 4 is more on technological adoptions. We are working with different technological providers from Huawei to Microsoft to a few others to look into some of the global case studies of technological advancement in fintech to be brought to Malaysia as well. And last but not least is really about the regulatory awareness. So this year, the association definitely we are working more closely with both Bank Negara and Securities Commission of Malaysia to help to become the bridge with the industry, whether the upcoming digital insurance framework, whether it is the enhanced sandbox 2.0 spearheaded by Bank Negara, whether it is the Credit Consumer Act spearheaded by CCOB. We want to be there, and we are already there to facilitate more conversations and feedback between the industry and also the regulator.
As of now, which industry, besides banking, which industry has you seen has been adopting this fintech very well?
Well, I think fintech has many different verticals. If you look at it, payment definitely is one key vertical which has developed fintech very well. Digital banking, as rightfully pointed up. I think the next big wave would be digital insurance. Today, there are easily 40 insurance companies in the Malaysian market. However, there are still pain points and inefficiencies in the market that could be potentially resolved with innovation. And this is where Bank Negara has also come out to the market to say that there will be a DITO, the Digital Insurance and Takaful Operator Framework, that will be unveiled by first half of this year, which may see the introductions of new digital insurance players.
Amazing. That was Bill Wilson Bear, President Fintech Association of Malaysia, or FAOM, and you can find this whole discussion on our AstroAwani.com and all of our social media platforms. So thank you so much again, Wilson, for coming and joining me in the studio today, and hope to have you again soon in the future.